Today we're going to talk about HIM stock that is up 20% after reporting their earnings yesterday. Normally I don't really talk about these earnings too much because there's obviously so many quite often, but when there's a big move like this, I thought I'd talk about HIM's earnings and some of the key points out there, and just in general, for me, quite a bit of a surprise reaction to seeing the share price move so positively off these earnings. So as you expect with HIM's stock jumping so much, they were very good earnings and we're going to go through them today. But from my point of view, I was shocked to see the stock up over 20% because what we've seen very much recently with a lot of these growth stocks, we've seen growth stocks that have brought good earnings out previously, and some of them growth stocks have gone down, 5, 10, 15%. So to see an actual growth stock move up off earnings, off good earnings, was the big surprise here. What was also very surprising to me when I looked at HIM's and Hers earnings was that they were, like I said, we're going to go through them all in a bit of detail, they were great earnings, but in them earnings, compared to a few other ones, is that we've actually seen like stocks that have gone down a huge amount on revenue beats, EPS beats, and outlook beats. And when I saw HIM's and Hers earnings, I thought, okay, that's a crazy outlook, it's a crazy revenue. But in the short term, the EPS was a bit of a miss, and quite a bit of a wide miss as well, even though it is always hard to predict where the EPS will be for a lot of growth stocks because it depends on a lot of different factors. The EPS can be very hard to beat, but what we've seen recently is those stocks that have missed EPS by analyst expectations by a massive amount get massively punished for it. And to see really good revenue numbers, really good outlook numbers, but to see the miss on the EPS and it still to go up that much as what it has done today was a massive surprise. So that was one factor that came into it. And the thing is as well, when you look at HIM's and Hers at the moment, you look at the share price, how low it is, you look at the negativity, and you look at HIM's and Hers over the last kind of 6 months, maybe even longer than that. We've seen HIM's and Hers bring out positive news over the last few months, and we've actually seen the company come out and bring press releases out that you look at that and going, okay, that press release basically means they've got this partnership's going to bring in this amount of revenue in the future, but that's not positive. We're actually going to send the stock price down on that press release. We've seen that sort of reaction. We've seen previously HIM's and Hers come out with massive beats on their guidance on previous earnings. Their stock goes down. So for this in particular, to see so much negativity and this to go up was once again the massive surprise. We've seen negativity out there. We've seen how much negativity there is there out in the market, and the negativity on this stock. I think probably DraftKings, Boohoo, potentially Beyond Meat are probably my top 3 stocks that I talk about that I see a lot of negativity about. But HIM's and Hers is a stock that I have seen a lot of negativity towards. So it was interesting to see such a slingshot reaction, because what we have is a stock like HIM's and Hers, and there's plenty out there, is that HIM's and Hers has done fantastic in 2021. It's been a brilliant year and it's just gone down, down, down. There's so much negativity out there in the market, a lot of negativity with growth stocks, and then just generally you have them extra stocks like HIM's and Hers, DraftKings, Boohoo, that just for some reason there's a lot more negativity with them stocks. I think maybe with HIM's and Hers, maybe it's because it came through a SPAC, I would guess, but you've had all that compressing on it, and for some reason today with that earnings news it just decided to pop up. And this is the big thing, is that a stock like HIM's and Hers is an example of where we are at the stock market. There's just so much negativity pressing on it that eventually, if this stock continues to move in the right direction, if profit and revenue continues to grow, obviously not maybe profit with this one because it's a bit more focused on revenue growth because it is a growth company, but eventually because of how compressed this is, the metrics it's at, the valuation it's at, and there's that much negativity, that when the market decides to flip, this is what will happen with these stocks. Sooner or later, it's a bit frustrating when you keep seeing these good news after good news come out, which has happened with HIM's and Hers over the last kind of few months. That it just goes lower, but we finally got to a point of view where eventually people go, okay, we need to start actually appreciating this company, and like that, 20% in one day. And like I said, there's no explanation of why this has happened. People or investors or Wall Street decided to take this as the final piece of good news that is actually represented in the share price. But when we've got such a combination of stocks down here, there's going to be a lot of stocks, and the HIM's and Hers will be one of them, where they start bouncing up, and when they do start bouncing up, it won't be just 1 or 2%. With how low a lot of these are, they are going to start springing up 10, 20, 30%, which is also a point of view. So yeah, I was obviously good earnings. I was shocked to see the good reaction, especially with all the negativity that's out there and has been out there, but sooner or later the rotation will happen, maybe this is it, we'll see, but that's just a point of view from the stock market mentality and the mentality of this stock here. But now we're going to actually get stuck onto some of the earnings. So Hims and Hers had a gap EPS of negative 0.15, missed by 0.5, which I was surprised, because I've seen companies that have come out with EPS beats, revenue beats, outlook beats, and then still go down a huge amount. So to see this actually miss the EPS by this much and still go up, I was like, okay, because when you look at the revenue and the outlook point of view, they were way far ahead of what was expected. So normally in a normal market, you would be fine with this, and growth stocks, is that kind of room for error on the EPS because of them being growth stocks. But recently we've just seen them being punished, so it was kind of strange. But yeah, overall, like, the revenue and outlook beat were just absolutely amazing. That's probably where the massive share price jump came from. And overall, that put us on 83% growth for 2021. Now, the big thing, once again, to kind of talk about this, and like I said, it's not, you look at the share price performance, and the share price performance hasn't reflected this at all so far this year. But 83% over the period of time, over 2021. Now, let's not forget, this is actually supposed to be 30%. So when management came into 2021, we were supposed to grow at 30%. This year we have grown at 83%. Unbelievable. Like, this isn't, you're not talking about a little slight beat here. This is massive amounts, way ahead of where we were supposed to be. So overall, it finishes off a fantastic first year of trading on the public stock market, I guess, for Hims and Hers. And the thing is, as well, is like a company like Hims and Hers, you normally don't get these sort of companies this early on in their life cycle on the stock market. This company is only 4 years old, and I think that's just a great compliment of how good the business actually is right now. It actually meant that year over year there's 104% growth, which is fantastic. We've not seen, I believe, Hims and Hers actually putting triple digit growth before. Some of this does come from some acquisitions, which they do kind of reflect on that and actually do give a figure without them acquisitions. But overall, 104% year over year growth. And when you get on the metrics for this company and it's at this sort of growth, it's unbelievably good. So yeah, that's obviously something special. New customers are actually contributing to gross profit after 2 quarters. So that's obviously we know that Hims and Hers has fantastic growth margins, and it shows that they are spending on trying to acquire these users, and very quickly they get that return back on them users as well. 2 quarters is fantastic. I mean, we were talking about DraftKings obviously a couple of days ago, and I think it took for their acquisition cost to kind of get about over a year. Obviously they aim for 2 to 3 years, but right now it is coming somewhere between a year to 2 years. And for Hims and Hers, this company is even better at them sort of costs, paying them back after 2 quarters. It's an absolutely unbelievable turnaround on that marketing. It also said that new customer acquisitions are down 13% on cost, which is unbelievable. I can't believe it. I think a few of that is because of they're starting to be a bit more brand awareness with a lot of their wholesale partnerships and actually being in physical stores. And I think they're just getting a little bit better at the marketing side of it. But I think that was really impressive, to kind of, when you consider as well how much the costs, you hear about other businesses talking about rising costs in this sort of area, and them to be at that sort of figure, I thought that was pretty good. Mobile platform, so they did launch their mobile platform. They did say, I think it was, I should have written the number down on the whiteboard, but I haven't. I think they said that currently 60% of the new users are currently using the mobile platform. So if you're actually having your users come onto the platform, you think about, okay, they actually have that app, they go onto the app, they can see probably the other services, you could probably upsell to them through that the platform, through the mobile platform. So it does show that users are quite taking on to that. So that should leave potential for probably some more upselling, I guess, really, through there. And you consider the other things that potentially, push notifications and everything like that. Omni-channel via partnerships were 58% growth in 2021. But the big thing here is that actually in Q4, these actually grew 365%. Now, at the moment, these channels don't make a huge amount of Hims and Hers revenue up, but what we've seen over the last few months is Hims and Hers have been signing major new partnership after major new partnership, and this is actually starting to showing in this revenue now. And like I said, we've gone from 58% in 2021, but in particular, what did we see through the start of probably Q1, Q2, Q3, during Q4 is more and more partnerships being signed. And I think the big thing is 365% growth is absolutely huge. So that should also continue into 2022, and we should see that area grow an absolute huge amount. And as they sell through these channels, it is key to kind of say that these will be lower margin sales. So even though this is growing a huge amount, it is probably going to hit the margins a little bit, because obviously a lot of the online margins are obviously a lot better. With the actual channel margins, obviously they have a lot more fees to kind of go sell that product. So the margins will be a little bit more pressured on the actual sales going forward, or the company going forward. So do keep that in mind. But what that kind of returns to you is obviously it's going to bring in, lots of more revenue. It's another income stream for them. But what it will do, and the big thing, is brand awareness. So rather than just kind of being on this online platform, if you are actually in these sort of channels, obviously if you walk into the likes of Walmart, or if you walk into the likes of Target and you actually start seeing that branding of Hims on the shelves, that kind of gives you that bit more brand recognition. And also if if you're a consumer and you're looking and you go on this online platform and you go, oh, I know that brand in Hims and Hers, I've seen them in the likes of the local, the store and everything like that. All that kind of ties in together and kind of just makes you a more well-known company, and potentially people, if they see your products a lot more, might be willing to recognize that brand, buy it in the store, maybe more open to going on to the online products because they know it from the supermarket or the store that they're going to. So that kind of all ties together. So even though the margins might be affected slightly a little bit, or not be as good as what they could potentially be, from the sales point of view and the growth they're giving and the brand awareness, this should be very good. Our management went on to say that in particular the Walmart channel was doing very well. So they, out of all the partnerships I have, it sounded like the Walmart in particular was the standout one. So we'll see what goes on from there. Now, going on to some of the numbers here, I actually didn't have enough. There were so many positive things in this conference call. I once again ran out of whiteboard room, and I had to put 2+ points here just to kind of remember it. One of them being that Walmart one, I couldn't fit it on the board. The other one was the Q1 guidance. The Q1 guidance was exceptionally strong. I've not actually wrote it down. I've had to write it down here, which was Q1 is going to be in the range of 72 to 78% growth, which previously was 59% growth, which is a massive amount of increase. Now that increase in Q1 is a huge amount, and I actually looked at Q1 and gone, wow, to go that high on Q1 says a lot. Normally Hims and Hers has been a company previously that really sandbags guidance and then over delivers. So to see them actually come in so high above what analysts were expecting in Q1, I was like, okay, I hope you've not given you too tricky numbers here to beat. Obviously, looking at what has gone on this quarter, the company is growing quarter over quarter very strong. Obviously, they have the acquisitions coming in, which will help them, which they said earlier, a lot more in the early part of the year. Over the next part of the year, it might be a little bit harder to kind of have strong numbers overlapping them because the acquisitions were done in that period of time. But that should help them. Obviously, the quarter sales are still going well. Obviously, they're going into next year. The channel side of the business is growing. At the end of Q4, was growing 365%, and hopefully the indications are that carries on going into Q1 very well. And obviously, the online side of the business still doing really well going into Q1. So with that kind of logic, that's why they were able to give Q1 numbers that positive. And I do look at Q1 and think that they should be able to hit the numbers, considering them just putting in an 84 million quarter, and the guidance is 90 to 93 million, I believe it is. That would suggest about a 10% growth quarter over quarter. So I think they would potentially do it. I did look at numbers, like I said, I did look at the Q1 guidance, and I thought, oh, maybe they won't beat it as what they normally do. So we'll see what happens there. I thought that was a bit of a change from management to see them do that. But then they'd come out with a longer term growth plan. And obviously Hims and Hers are focused on growth. Absolutely, that's what the company's reinvesting in. EBITDA margins were about what was expected. But on the growth side of it, I think that's the big question that we're looking at with this company. Now, considering on the long-term growth, once again, they're up that a massive amount. So where at the moment analysts were predicting 350 million, they've actually guided 365 million to 300, there should be an extra row there, 380 million. Now, considering in Q1, if we go on the lower side of the guidance, which is currently going to be 90 million, if we say that over every quarter they carry on doing 90 million, so if we do 90 million over 4 quarters equals 360 million. And that's considering that there's no growth. So if we look here, if they do 90 million every quarter, they're actually going to do 360 million. And if we look at the guidance that's given for this year, that's 365 million to 380 million. So considering if Hims and Hers do 90 million every quarter for the next 4 quarters over the year, then they're just going to be below their estimate. But what has happened previously is Hims and Hers quarter over quarter, it carries on growing. So at the moment, looking at the guidance that's given of the next Q1 period, I thought guidance was a little bit tight, but going on to an actual 2022, even though they raised it, which they don't normally do, even that guidance does kind of look a little bit sandbagged. And like I said, even if they stay at 90 million all the quarters through 2022, they're only just going to be under that. And obviously Hims and Hers never do that. Normally quarter over quarter, the revenue does increase. So actually going into the end of 2022, I could potentially see Hims and Hers potentially doing 400 million by the end of 2022 looking at this. And obviously if they came at 400 million, that would be a beat on the outlook. So obviously that would be amazing. The big thing as well, that would put it down at 2.5 times sales. And once again, for a company that is growing at this sort of rate, is very close to profitability with these gross margins. You don't normally get a company that's just come off a year of growing 104% down at a 2.5 times sales as well. So yeah, even though Hims and Hers has absolutely boomed today and done very well, and it's good to see a company like this actually finally getting a little bit of respect after its fantastic 2021. You do look at this company now, and even on a 20% jump today, the share price is still massively undervalued for a company that's doing these sort of numbers. And sooner rather than later, like I said earlier in the video, is that a company like this eventually does get the respect from Wall Street and investors, and eventually they'll go, oh, why weren't we buying that one earlier? And the share price will do very well. And without doubt, you know, Hims should be still commanding a double digit in the share price. So we'll see when that respect finally comes to this company, I guess. But yeah, it's an absolutely amazing company that's just put on another good quarter. But for some reason, it's finally getting the respect on this quarter, and sooner rather than later, I think it will get the respect it deserves every single quarter and back at the correct share price that it should be. So we'll see what happens there. But from a Hims and Hers shareholder, very good quarter. And once again, I'd have to give it probably a 9.5 out of 10 if the EPS was just slightly better maybe. But that's really analysts' fault really for missing the guidance, I guess. But overall, the numbers and the information they gave was very good. Another smash from Hims and Hers. So yeah, probably a 9.5 out of 10. So I hope you enjoyed it anyway, guys. And congrats to you Hims shareholders out there for kind of sticking through some of the pain. Kind of gives you a little bit of confidence, I guess, to kind of, when you get these sort of numbers come out from earnings, it just kind of gives you a little bit of a boost, like, yep, this company's going to be fantastic in the long term. So yeah, thanks for watching, hit the like button if you're new, subscribe, and I'll see you next video.